So I want to walk you through how I actually stay sane holding a big, volatile AI stock. And this isn't about price targets or hype. It's a really simple three-step system that I use on my own portfolio when, my emotions start getting a little too loud. We've all been there, right? You're just staring at the screen, your heart's pounding a bit, and every single instinct in your body is screaming at you to just hit that sell button, just to make the feeling go away. Well, this system is designed to fight that exact impulse. And look, this isn't just theory. Today, I'm actually running this system on AMD, which, as you can see, is one of my bigger positions. I'm going to pull back the curtain and show you exactly how I think through a real holding in my own portfolio. And just to be crystal clear, this is not me telling you what to buy or sell, okay? This is all about sharing a mental model, a process that you can maybe adapt to help you think more clearly about your own money and, frankly, avoid blowing yourself up. Okay, let's dive in. Step 1 is what I call the Thesis Check. The very first thing I do is force myself to completely ignore the share price and check if the original story, the reason I invested in the first place, is still intact. And I ask myself this one simple but really powerful question. It forces you to step away from all the daily noise, all the chatter, and reconnect with the fundamental reason you even own the stock. See, when I first got into AMD, it was because of this story right here. I believed the world was moving towards massive AI and data center compute, and I knew someone had to build the hardware for that. And I felt pretty strongly that the market was big enough for more than just one winner. That was the core thesis. Simple as that. So to check that thesis today, I'm not asking, is the stock up or down? No, I'm asking these questions. Are they still genuinely competing? Are customers, real customers, actually buying their data center products? Is there any hard data out there that shows the story is fundamentally broken? I'm looking for facts, not feelings. So after I go through the latest earnings, the product announcements, all of that stuff, my personal answer right now is yeah. The story still holds. Sure, there's a ton of volatility and noise, but I haven't seen anything yet that has completely shattered the idea that they can be a serious player here. All right, let's move on to step 2, which I call the board meeting. This is where I deliberately, and I mean deliberately, give the negative case a voice. I force myself to think like a total skeptic, to find the real danger, not just the scary headlines. I ask myself this exact question, and I'm pretty tough about it. It forces you to cut through all the little worries and anxieties to find the one thing, the one big thing that could truly destroy the investment. And for AMD, the answer I keep coming back to is this: execution risk. In plain English, that's just the risk that they promise all these amazing things in AI, but then they fail to deliver products that are good enough, or maybe they deliver them too slowly, and in the meantime, their competitors swoop in and lock up the whole market. In this slide right here highlights such a crucial distinction. Volatility, that's when the stock drops 20% and you feel that pit in your stomach. But real risk, that's when the fundamental story completely falls apart, which could lead to a permanent loss of your money. We're not hunting feelings, we're hunting for the real risk. And this is what that risk actually looks like in the real world. These are the specific signals I'd be watching for: losing big customers, their products underperforming in the wild, the whole momentum just kind of fading. This makes the risk tangible. It's not a vague fear anymore. It's something I can actually monitor. So after all that thinking, what do I actually do? Well, step 3 is designed specifically to prevent analysis paralysis. It gets you out of your head by giving you clear, simple choices. It forces you to make a decision. This is it. This is the final question. It's the one that moves you from the world of ideas and risks into the world of concrete action. No more procrastinating, no more maybes. A choice has to be made right now. And these are the only 3 options on the table. That's it. It's not about feelings or 20 different possibilities. It's just A, B, or C. I can trim the position, I can add more because my conviction is high, or I can just hold and monitor for some very specific triggers. For me, with AMD, right here, right now, the choice is option C. I'm holding my position, and I'm monitoring that key execution risk we just identified. The thesis is still intact, and that risk, while it's very real, hasn't shown any clear signs of happening yet. So I wait. But monitor isn't a passive word. It means I have a specific alert set in my head. I'm not looking for one scary headline or one bad quarter that makes me panic. No, I am looking for a pattern of failure. And if that pattern starts to emerge, then the entire case gets reopened, and we start this process all over again. So Why am I sharing all of this with you? Well, because this whole thing isn't really about AMD. It's about having a system to manage your own psychology when the market just goes completely chaotic. A system like this, it forces you to respond to actual data, not just whatever mood you happen to be in that day. It helps you make peace with the fact that volatility is just part of the game. And maybe most importantly, it shifts your focus from trying to perfectly time the market to just building a repeatable process that protects you from your own worst instincts. Ultimately, the goal here is not for you to copy what I'm doing. It's to give you a framework. The real power comes from building your own rules based on your own goals and your own risk tolerance so that you can think clearly when everyone else around you is panicking. And I just want to leave you with this one final thought. Your job as an investor isn't to constantly tinker with your portfolio because you're bored or nervous. Your real job is to defend the power of compounding by sticking to the rules you set for yourself when you were calm and rational. That, right there, that's how you win over the long run.